Sure. Well, I think we rushed Abhishek through into market open. He was getting us that view from Goldman Sachs. Abhishek, you left off saying 40-50% cuts to their earnings estimates for the next 2 financial years. I mean, that's steep.
That's very steep, and the stress in the MFI sector that we highlighted to our viewers in May of 24 has panned out over the 2 quarters, that is Q1 and Q2. And now we are seeing brokerages downgrade, stock price as well as recommendation on lenders with MFI exposure. So Goldman Sachs is the first one, and this is one of the biggest downgrade that you are seeing in the MFI lending space. On CreditAccess Grameen, they have downgraded to sell from buy, cut the target price by as much as 60% to 564 from 1,426 that it was earlier. And they say that earnings visibility is clouded given the fact that asset quality hiccups are seen, and there are concerns with respect to asset quality in the near future as well. De-rating structural is in nature right now, and they expect further de-rating of CreditAccess Grameen. They have been, the deterioration in asset quality, which they expect it will accelerate further, given the fact that there are new guardrails which have been put by MFIN. So MFIN has actually reduced the number of lenders to a single borrower to be at 3 from 4 that they had earlier. So they have cut the EPS by 40 to 50% over the next few fiscal, that is FY25-26 and FY27 as well. They expect credit costs to remain elevated at 6.5% or 6.6% to be precise for FY25 and about 4.5% for FY26. So valuations, as per them, don't adequately reflect the underlying stress that is there in the sector as well as the book. Also, they have written on financials, that is Goldman Sachs has written, they say that, sizing the microfinance stress could be as high as $4 billion to $18 billion, which is like almost 1.5 lakh crore of, stress that they anticipate in the microfinance segment, which is, potentially on the higher side if you take a look. So they have a sell rating on CreditAccess Grameen. They say that you should, or one investor can buy, AU Small Finance Bank, L&T Finance and IndusInd Bank as diversified players are better placed than only microfinance lenders. Back to you.
All right, Abhishek, thank you very much for that. So that's a more detailed kind of explanation of what Goldman is saying. CreditAccess, by the way, from the opening lows, it's up about 4% or so. But this is still very, very early days. It's a still big 7.5% cut that you have on your hands. The other thing, of course, is that if you look at microfinance lenders across the board, CreditAccess maybe has the lowest rate of lending. So, that's the other thing to consider. And it takes me back to the earlier point that what about the others? I mean, only MFI players. What happens to them if this is the state, as Goldman puts it, for CreditAccess?